silver is a critical industrial metal and potentially a critical precious metal as well if it ever gets monetized again and re-rated as a precious metal by governments and central banks. The potential for silver is much greater than the potential for gold, therefore, because there's so much more that silver is important for in the industrial revolution that we're going through right now. The premium that companies will pay for silver is going to be incredible. Right now, to produce silver around the world is about $17.5 an ounce. And the premium that I believe will be paid on that will be as much as 400%.
Buy your gold and silver at SD Bullion. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. All right, welcome back to the channel, Lior. Good to have you on. I think we picked a good day to speak with one another.
Absolutely.
So why don't we just get right to it? Let's start off with the metals, because at the time we're speaking, gold is breaking out to new record all-time highs in US dollars. So it had been breaking out in foreign currencies, and now we're seeing the breakout in US dollars. We've been talking about this for a while, but it looks like it's happening right now as we speak. To what do you attribute this rise in the price of gold?
The dollar has peaked. The dollar as a reserve currency under the Bretton Woods system and the fiat monetary system has peaked. We created a double top in October 2022 and today. Today meaning in the last month and a half. And what we're about to see is about a 10 to 20% downturn for the DXY index, if not more. In my opinion, it will be just over 25%. And we've just gotten started. So essentially, what I attribute this to is the fact that the dollar is no longer going to rise ever again under this system. It has peaked on the DXY. And that has stunning ramifications for commodities in general, for silver in particular, and for gold. But if you can understand what I just said and really behave as though you believe it, if you do, then you realize what we've just witnessed. We have just witnessed the top for the dollar ever. And so this is what I attribute this to. The reason that it has created this top is because the United States has reached its pinnacle in terms of its relative dominance compared to the rest of the world with regards to the stock market. The Magnificent Seven are bigger than all of the world's other stock markets combined. Essentially, we're now going to, the pendulum is going to swing back to other parts of the world because of Trump's genius policies, and that is really going to help the price of gold and silver during the next 4 years, especially silver. But what happened like in the last couple of days that really took us over the 2,800 mark is, one, you had the Fed last night as we're doing this interview, last night for me because it's in my nighttime. Effectively, they walked back their hawkishness a little bit, and that has added to the probability that we'll see 2 or 3 rate cuts this year. That really helped gold to pop further. And the second thing is that we already see from the first week and a half of Trump's presidency that tariffs are not going to be this draconian tool that is slapped universally. It's going to be much more strategic. And I always said that, but the market had its own ideas because it doesn't understand Donald Trump yet. We can see that tariffs are going to be used very strategically, and that deflates the dollar bubble. There is a huge dollar bubble. There's about $7 trillion in money market accounts. So the amount of money that's going to flow out of dollars and into assets is ungodly.
That's a lot of cash.
It's a record by miles and miles and miles. Pre-pandemic, you had 2 trillion in money market accounts at the peak. So just think, like, we've tripled the amount of cash in about 4 years. That's like insane.
Yeah, and at some point, that cash is going to have to find a home, especially if rates go down. So it does seem like markets are liking what they heard from Jerome Powell yesterday. Let me get your take on an aspect of that. So Donald Trump has mentioned recently at Davos that he wants to force interest rates lower. Powell seemed to indicate yesterday that the Fed would maintain its independence and that this pressure from the executive would not influence their decision making. What's your take on that? Do you think that Trump is going to be able to influence Fed policy to drive rates lower?
It's a very good question that I haven't yet figured out exactly the effect and the degree that Donald Trump will have, because in the excess of options between the most unique solutions to the most conventional ones, I still have in my mind the possibility that this administration will abolish the Federal Reserve. So there's so much that can happen with what Trump can do, because the way that he thinks has nothing to do with the way politicians think at all. His thinking is not political, and therefore, in order to really get into his head, it takes time, and I spend hours trying to understand that and anticipate that, because it helps me in the markets. I don't know if you've seen our portfolio, the Wealth Research Group portfolio. You can download it. It's my personal portfolio, wealthresearchgroup.com/portfolio. But a number of the 20 companies in there, or 25 companies, are trading at all-time highs already, and have more than doubled since we started to publish the portfolio. And the reason is I try to understand the way that Trump thinks. There's a lot of ways in which this will play out, but what I don't think is he will do the same thing that he did last term. Last term, he tried to voice and pressure the Fed, and I don't think that's the way that he's going to do it this time. It's not going to be the same thing. What I think the game theory for Trump is very, very unique. I'll give you an example, and then I can tie it into to what I think he will do with the Fed. You obviously know about the situation in Gaza Strip. It's Gaza Strip right now is a pile of rubble. It's like a demolition site. What Trump really wants is to finish with the Gaza problem. So he wants to disperse the 1.5 million people there into either Muslim nations, European nations, or other nations with the inclination to accept the people of Gaza. And what he's saying out loud is, hey, this is not safe for children, or this is not good for children. This is what he's saying in public. What he means in real life is that he wants to show, one, the price of terror. This is the price. If you are a terrorist, you will pay the ultimate price. And two, he wants to prove that you can deport 1.5 million people in an orderly way, so that this sets precedents for other countries that are dealing with the same thing. So you can see how the game theory is three things. One, to say it out loud and in public, and then never walk back from it, because America first, and America has to win. So that's the first part of his game theory. Two is to make a public statement that the public can get behind, which is, hey, let's save these people. They cannot live there. It's going to be disease and everything else because they don't have infrastructure. And the third thing is to have a much deeper, more unique purpose to what he's doing. Those are the three amazing things of his game theory. So what is the game theory for the Federal Reserve? One, he's already said he wants lower interest rates. That's in the public domain, and therefore it must happen. That is the entire game theory for Donald Trump, that whatever he says in public has to happen. That is how he's building this administration. That is how you deter foreign adversaries, and that's how you create policy within the United States of America. Secondly, it's to have a public reason for having lower interest rates. And third, it's to have a real reason, which is much deeper and more genius. I think what will happen is, once you start the drill, baby, drill, and the Secretary of Energy will present his policy for how America is going to lower the price of oil, which the real reason you want lower prices of oil is what? You want to lower the probability that President Putin has the capability of fighting a bigger war. But he's not going to say that in public. He's going to say in public is he wants to fight inflation for the behalf of the American people. That's why he wants lower oil prices. So you have the three now: lower interest rates, public reason to lower inflation, but real reason is to end the Ukraine war, lower the price of oil in order to bring Putin to the table, and obviously the third thing is you want lower interest rates because you are now in the process of fixing the $36 trillion mess that Hussein Obama, Sleepy Joe, and Crooked Hillary and her husband gave us, along with fool me once, fool me twice, fool me three times, George Bush. So you have these things that must occur. And that's what I think will happen. There will not be a lot of public pressure on Powell. There will be a lot of pressure in general to say, hey, look at this. Oil prices are down. Inflation is coming down. I don't understand why interest rates are not down. And then the public will say, well, why aren't they down? Another way he's going to use this is he's going to help banks make a lot more lending for housing. He's going to say affordability is very bad. The first-time home buyer is now 38 years old. That's the highest that's ever been in American history. It's crazy. In order to lower that, he's going to create opportunity zones, areas with tax incentives that you can move, and for the first year, 2 years, 3 years, you're not going to pay any taxes, income taxes. And there's going to be a lot of jobs in those areas because businesses are going to flock into them. All of these areas are going to need new homes built. And therefore, if you want to have lower mortgages, he's going to pressure the Fed to lower rates. That is how you do it. You get the public to pressure the Fed and not himself. That's the difference between the 45th term and the 47th term.
All right, so kind of a lot to unpack there. There are a few points that I'd like to address and see what your thoughts on them are. So Trump 1.0, first time around, also contributed significantly to the current debt burden. So, how confident are you that 2.0 is going to be different in that regard? In regards to oil and the cost thereof, that seems to be a fundamental aspect of Trump's attempt to reduce inflation. However, one aspect of that, which seems like it will pose a challenge to his efforts, is that U.S. cost of production, specifically of new wells, is considerably higher than some of the other producers around the world. The Saudis are producing oil and gas for under $10 a barrel, but the cost of a new well in the U.S., the break-even point is something like $65 a barrel. Now, oil is already close to that level. So how successful do you think he will be in actually reducing the cost of oil without putting these U.S. producers out of business? And then housing affordability, wouldn't lowering rates and increasing lending contribute to the affordability problem in the sense that it'll stimulate demand and there'll be more buyers?
Okay, so three questions. The
Yes.
first one, I'm sorry, the second one was about oil. The third one was about affordability. The first one was about, the debt problem.
Yes.
So the first term, what's different about Trump is that he's not a politician. Therefore, I'd like you to think, are you a basketball fan? Do you like basketball?
I'm not much of a sports fan, so those analogies will go over
Okay.
my head, but some of the people watching probably are, so shoot.
Yeah, easy. So when Michael Jordan came to the league as a rookie, he was a great player. He didn't win the championship for 6 years. For 6 years, he didn't win the championship until 1990. Then he changed coach. He changed a lot in his team, and then they won a three-peat. What's interesting is that it's the same player, but it's not the same player. There's a great evolution, and winners evolve. You cannot compare Donald Trump in 2016 to Donald Trump in 2024. It is not the same person. And therefore, this administration is going to behave so much differently because they have so much that they've learned. I'd like you to really understand. Scott Bessent, who's going to be the Secretary of Treasury, his job is to lower the federal deficit by $1 trillion a year. On the other side, there's going to be a sovereign wealth fund that's going to be created by Howard Lutnick and perhaps others. Elon might be involved, but it's going to be more the work of Howard Lutnick, and that's going to raise $1 trillion of revenue a year for the United States. Between shedding $1 trillion and earning another trillion. That's $2 trillion a year projected. And that's going to end deficits. Now, if you want to start shrinking the national debt, truly, it's going to be a function of the tariffs and of other policies. It will happen. This is a different administration than the one that came before it, and it's a different time. What I really like the viewers to understand is that this is now an existential war that the West is fighting against the rest. It's the West against the rest. And one of the problems that we face in the West is that Europe is not awake. It's asleep. And therefore, we cannot wait for Europe to wake up. In 1 month from now, less than 1 month, in 3 weeks, the Germans are going to have elections. If they have a good elections, that's great. It's literally going to wake up Europe. But if they lose, it's going to be very bad. If the party that isn't just like the equivalent of Trump is not going to win, it's going to be very bad. But it's really an existential war. I urge you to listen to the confirmation hearing of Marco Rubio, who's going to be Secretary of State, who is the Secretary of State. And you have to realize this is existential. And because all of these countries, the United States, the European Union, China, everybody is in deep debt. Deep. The game has changed. America cannot support its allies anymore with funds. The foreign aid is not the new game. The new game is to own the supply chains. Greenland, the Panama Canal, the Indo-Pacific corridor that's being built or in the process between India, Saudi Arabia, Israel, and Europe. Japan, Alaska is going to be big. All of these areas, this is the new turf war between the West and the rest. You have to shrink your debts in order to be a winner in this existential war between the West and the rest. This is an existential war. This administration, it cannot think in other terms except existential war. And therefore, I tell you, you will see incredible strides with regards to your national debt, to your spending, and to everything else. You are unwinding 100 years of FDR and FDR legacy and moving to the next stage. It's a whole different America. In 20 years, you will not recognize this United States of America. This United States of America was built between the 50s and 70s. And the new United States of America is going to be built in the next 20 years. And it's a whole new country that you're building. So that's number one. With regards to oil, Trump is going to look at ways, one, to do a lot of natural gas and liquefied natural gas into Europe. So that's important. Something that you have to realize is that Saudi Arabia, it drills cheap, but it cannot offer other things. The United States can sell you their oil at a higher price or sell domestically at a higher price. But to drill at $10 a barrel is one thing, but then you have to ship it out of Saudi Arabia. And without U.S. ships in all of these straits, the insurance costs are going to go through the roof. And that's what's going to happen. So it's one thing to drill at $10 and then have the U.S. Navy patrol the oceans so you can ship all this Saudi oil around the world, $10 a barrel. But it's another thing if the Saudis have to pay for security and insurance. It's a whole different ballgame. So I would urge you to think in terms of the overall cost, not just the price to drill, but the overall cost. And U.S. domestic oil is going to be the cheapest, and U.S. natural gas is going to be the cheapest. So that's another thing. And oil and natural gas are super important in order to double the electrical capacity in the United States. And you need to double it in order to win the AI race, which is the biggest race. Third thing is about affordability and lowering interest rates and stimulating the economy, et cetera, et cetera. There is a shortage of homes, about 5 million homes in America. You need to build a lot of homes. And therefore, it's about unfreezing the bureaucracy around zoning and new housing areas. That is the real problem. That is what's causing this affordability issue. There is so much supply of contractors that are willing to build. The problem is bureaucracy at the municipality level and the federal level. And that's going to be cleared away. Once it's cleared away, the unaffordability is going to drop. It's going to be so much more affordable to buy a home, and there's going to be so many perks and incentives to buy a home. Between all these three, first of all, if you haven't figured it out yet, I think Donald Trump is the greatest leader in history. So that's one thing. That's my bias. So take everything that I'm saying with that bias in mind. I believe he's the greatest ever. So that's one thing. So if you want to hedge what you're hearing, is hedge it with that. I trust this administration to do unbelievable things and to make unbelievable achievements. And therefore, that's where all of my thinking starts. That I believe that they can figure things out that have not and will never be done in this way ever again. This is the best administration ever. And so those are my answers to your three questions. So yeah.
We all have our own implicit biases, so I think it's good to acknowledge that. And I hope that you're correct in this assessment of the situation, because if you are, we're all going to benefit from it, at least here in the West. Let
Absolutely.
me turn the conversation back to the metals. So you mentioned silver earlier and how you think that silver will be an even bigger beneficiary than gold potentially with this situation that's playing out. Let me ask you about the tariffs and the precious metals. So lately there has been speculation or coverage in Bloomberg and the Financial Times about the potential for a squeeze in the gold and the silver markets as it relates to tariffs. There's been this influx of metals into the United States, into the COMEX. Some of the London depositories have seen their inventory levels decline. The tariffs that we will see imposed, we've heard there's going to potentially be a 25% tariff on Mexico. It's the world's largest producer of silver, one of our biggest trade partners. 25% tariff on Canada. They're a major gold producer. We may see a tariff on China. They're the world's #1 gold producer. So what's your take on what we're going to see in the physical gold and silver markets and the paper markets as well? What impact do you think tariffs will have, and what is the potential for a squeeze type event in your assessment?
We are in a race against the rest. Silver is a critical industrial metal and potentially critical precious metal as well, if it ever gets monetized again and re-rated as a precious metal by governments and central banks. The potential for silver is much greater than the potential for gold, therefore, because there's so much more that silver is important for in the industrial revolution that we're going through right now. The premium that companies will pay for silver is going to be incredible. Right now, to produce silver around the world is about $17.5 an ounce. And the premium that I believe will be paid on that will be as much as 400%. So I think by the end of the decade, you will be talking about silver in the $70 to $80 an ounce and perhaps even $90 an ounce. It's just critical to understand that in the last 40 years, you've had two unbelievable, abnormal factors contributing to deflation of commodities. One, the Soviet Union fell apart and they sold commodities for peanuts. Two, you had a world where America was the only formidable army, and therefore ships just roamed the open seas as if it's nothing. This is the most abnormal commerce in human history. There is always in human history a price to be paid for ensuring the open seas. But the United States of America, led by Hussein Obama, Joe Biden, George Bush, and Clinton, did not charge any country for what the U.S. has done. It charged its own citizens. And the price of commodities, therefore, deflated, and you got into $36 trillion in debt. The real cost to ship commodities around the world is much greater. And now we're going to find out that cost. Silver is going to be very much in demand, much more than it is today. And in order to securely get it, you're going to have to pay a lot of premiums. So I think silver is going to go a heck of a lot higher. You haven't seen anything yet. We are breaking apart from the Bretton Woods system. And we're just 10 days into it. The ramifications of this are enormous. And people will start to understand them in 4 or 5 years, because most silver stackers watching this video are probably saying, no, silver has disappointed me for 14 years. It's going nowhere. That is their bias. They have been blaming JP Morgan and the big banks and the Comax and this and that. And it's going to take time for them to really understand that. That's why most silver stackers are not triple downing on silver right now. If they really understood silver is going to 80 or 90, they would act differently. But this shows you, if you poll your audience, you will see that no one believes in that.
Sentiment is very low in the sector right now. I mean, I can just say that from my own personal experience running the social media centered around silver, and what I observe in comments and from the audience is that, yeah, sentiment is quite low right now. And I think that that's also reflected in the low premiums that we see in the physical market. So, yeah, to your point, it is certainly, a time when I think a lot of stackers, maybe the most diehard among us, are still stacking. I know I am, but there is a lot of negative sentiment out there towards the metals right now.
What I'm trying to really convey is that you have to just clear out your thinking about how everything has been up until now. We are in an entirely new era, just a new era. Okay, just like the caterpillar becomes a butterfly, it's different. It's not a linear progression. We are in an entirely new era, and in this era, the first thing you have to realize is that the superpowers of the West, meaning the United States, and whoever wakes up, you have Argentina waking up, Israel is definitely woken up, Hungary, Poland looks like it's starting to shift, El Salvador, and I believe other countries will start to follow suit. These countries understand that they are at war. They will not behave in the same manner that they have behaved. If you understand that the West has outsourced commodities for 30 to 40 years and they have given their adversaries control over the mining and processing power in the supply chain, they have to get them back. And it will not be easy and it will not be cheap. So I tell you, start to think about commodities in terms of a super bull market, because that's what they're entering.
In your view, who will be the biggest winners from this commodity super cycle? And certainly holding physical metal is, it's not advice, of course, but it's what I advocate myself. It's what I do myself. But in terms of the global economy, who do you foresee coming out on top and really benefiting from this new era that you describe us entering into?
The mining companies. The mining companies have been brutally hurt by Hussein Obama and Joe Biden. Environmentalism has created a situation where permitting has almost been something that has become impossible in the West. A snail here and a tree there have cost companies 13 years to remove a snail from their property in order to get all the lawyers and attorneys and the government and everything else. It's been a nightmare to create new mining projects. When you can eliminate that, you're creating a renaissance for the mining companies. So I think those will be the biggest beneficiaries. Some stocks are going to go up 3, 4, 5, 6, 7, 800, 900, 1,000% in 1 year. And this will go on for the next 4 or 5 years. There will be a lot of wealth created in mining in the West in the next 4 years. It's just think about it this way. There are zero rare earth mines on U.S. soil. For some of the rare earths, there are 0 mines in America. Lithium, there's 1 mine. Uranium, 1 mine. It's almost unbelievable that they even say these words. The big piece of the pie is going to be in the mining stocks.
And is there anything else you want to share with us about this new era or some of the trends that you're observing before we wrap this conversation up?
I think if you really want to understand everything and stay up to date, either follow our newsletter, wealthresearchgroup.com, subscribe. It's a free newsletter, Sunday, Tuesday, Thursday. It's this type of quality interview, but in written form. And we have a new channel on Telegram and on WhatsApp. If you search for Portfolio Wealth Global, either on Telegram or on WhatsApp, you can join the channel. And there, these are more like breaking alerts, bulletins, stuff from the heart. and but shorter messages than in the newsletter form. I love both. I author both. That's the best way to always stay up to date with what's happening with insights and everything else. If you look at the next 80 days here, or 80 or 90 days, the first 100 days basically of Trump's time in office, I think you haven't seen anything yet. You really have not seen anything yet. This is going to be incredible, and we will cover the whole thing.
All right. I read your newsletter, and oftentimes you
Thank
are
you.
the first person to bring things to my attention, which are highly relevant. So I would recommend everybody check out Lior's newsletter and his other projects. There'll be some links down in the description. And thanks for joining me, Lior. Always an interesting conversation. I really appreciate it.
Thank you.